Alors, je voudrais remercier la Maison du Canada et aussi la haute commissionnaire Janice Chaverette pour leur hospitalité aujourd'hui. I'd also like to thank the Northern Miner. It's an honor to be a keynote speaker today. My dad was a mining exploration person as well, so I kind of grew up reading the Miner. So I think it's very fitting to be here today. And the third thing, I'm just very happy to be in London. I come every year. I've been doing it for almost 30 years to talk about mining investments. It's always a pleasure. A couple years ago, actually, I was honored. I was invited to Buckingham Palace, and I was coached. If royalty approached me, I was told how to address them, Your Royal Highness, and subsequently, Sir. And I had my Franco-Nevada hat on, so actually, I was honored. Prince Philip came up to me, the Duke of Edinburgh. He shook my hand. And he says, "What do you do?" And so, I said, "Your Royal Highness." I have my Franco-Nevada hat on right now. "I'm in the royalty business too, and I collect royalties, from gold mines all around the world." But I carried on, and I said, "I'm very impressed by all the gold you have in Buckingham Palace." And he said, "You can't have my gold." And he has exactly the right attitude. Gold is precious, it's something that needs to be protected. So actually, most of what I want to talk about right now is how we're doing that with the World Gold Council. But I've been told to do a bit of a commercial on Franco-Nevada first. I'll keep that short, and then I'll talk about the World Gold Council. So in terms of our business principles, what it is we're trying to do all the good stuff in the industry and avoid the bad stuff. We're not a mining company. We don't operate or build mines. We don't even do any exploration. So for that reason, we don't get a lot of coverage of the Northern Miner. It's more of a financial business. But over 30 years, we've collected royalties on mining properties around the world. And the way when I'm in New York and we have to explain this to investors, I describe our company as essentially the Airbnb of the gold industry. We get a little piece of a lot of different mines. Our business principles, as I said, is outlined here. And what we find is royalties on great geology is really the most accretive thing you can do in the business. We're not financial engineers. We're trying to expose ourselves to the exploration potential of good geology. In terms of the business model, we describe Franco-Nevada to investors as the low-risk way to get exposure to the industry. What we try to give the investors is the best aspects of a gold ETF and the best aspects of a gold operator. And so this is where we do the check marks here. And the message, it's worked with investors. Franco-Nevada's market cap as of yesterday was over $14 billion US. So we're just behind Newmont and Barrick and among the global gold companies by market cap. The other thing that's important is having a broad portfolio. And because it's such a simple business, we can be involved in a lot of properties and manage it with few people. So as you can see, it's a lot of numbers. We're involved in not only producing advanced projects, but also a lot of exploration projects. We add these every month, small properties. If it's good geology, we're very patient with them, but we're always interested in the upside. What I think we've done is because we have such a broad portfolio, we've become a proxy of the entire gold industry, so we're covering all stages of projects. It's about 370 assets that we're administering now, and we're doing it with 34 employees. Our properties cover about 44,000 square kilometers, and that's about the size of Switzerland. But I think it's better than Switzerland because we're trying to do it on the right trends. So we're trying to pick good geology within that. In terms of one of the advantages, as I said, it's a simple business, and so it doesn't cost a lot to run this business. And I have my past auditor here, and he'll verify the numbers, but our G&A costs on a quarterly basis have been almost flat for over a decade. And that's despite our revenues going up sixfold. So this is an absolutely scalable business. I would love to have 1,000 royalties, and maybe we add 1 or 2 auditors. But I think we've got that capacity because every asset we buy is incremental. There's not a lot of management effort going forward. I'm told with our number of employees, it's 34, that we have the highest market capitalization per employee of any company on the New York Stock Exchange. So we'll try to maintain that. Some of the things that have really driven our portfolio in the last few years is that we've got long life assets. And an advantage of being in the royalty business is we're not restricted to just gold properties and gold companies. What we've been able to do is we've been buying gold and silver from the large porphyry gold projects and the skarn projects in Latin America. And what's the advantage of some of these assets is that they can go for 30 to 50 years. It's hard to find those types of assets in the gold industry. What you see in the upper left is Cobre Panama, and you see one of the initial ships just arriving. They're going to be making their first official concentrate shipment next month. This is going to be a cornerstone asset for our company. First Quantum has been developing. It's probably the largest mining development project in the world, just coming to completion right now. So we're very proud to be associated with that, and it's something that's going to be a cornerstone for us. These are mines that are run by BHP, Glencore, Teck, First Quantum, the Lundins of the world, and so we have really quality franchises here that we're participating in. In terms of performance, you can see there's a good, strong linear trend from the lower left to the upper right. Our performance was off just a bit in 2018 because there was a pit slide at our Candelaria mine, which is one of our largest cash flow producers. It was the first year we didn't make guidance, but I feel like we've hit the ground running for this year. Just a week and a half ago, we had our first quarter release, and we had record earnings and record revenue numbers for the company. And what we're telegraphing right now is this is really the start of a bunch of records, because with Cobre Panama coming in, with Candelaria getting back to normal operations, and we have a lot of growth coming from our oil and gas assets, we expect to be hitting further records in the second half of this year and through next year. So we're one of the growth companies in the industry. It's a very good story. I'd like to point out in the bottom left is we measure G&A as a percentage of the value of our company, because one of the things that a lot of investors buy is the gold ETF, the GLD. And to be exposed to gold through that ETF, it costs you 40 basis points, 0.4% every year to hold that gold. With our company right now, our entire overhead is running about 17 basis points. So I'd like to point out we're kind of twice as efficient as a gold ETF, and we can do that with active management of these assets. And then, of course, it's dividends. You know, I listened to Steve Letwin this morning, and we've achieved the dream. We are a free cash flow generating business that not only generates enough cash for dividends and growing dividends, but also to do the reinvestment. We're self-financing going forward. And so what you see here has been the trend of dividend payments. We've raised our dividend every year for the last 12 years. We just made our last announcement, again, 10 days ago at our annual meeting. If anyone who bought us at our IPO is in Canada is now getting almost a 9% yield from their investment in Franco-Nevada if they had bought us 11 years ago. So it just shows you the power of compounding in dividends. One of the nice things about this company is I can't even screw it up. If our entire management team and board gets hit by a bus, we're not only going to grow for the next 5 years just from the projects coming in, we can maintain these dividends for the next 35 years and still have billions left over in the treasury. So I'd have to make a major mistake to screw it up at this stage. So we've got a very powerful business model, and what we're now focused on is proper succession planning to keep the DNA in order we can preserve this model going forward. And so, you know, what we've coined ourselves is Franco-Nevada, the gold investment that works. We've now have an 11.5 year of returns to our investors. It's a 17% CAGR, or compounded annual growth rate of total return to our investors. And so this has been in a market that's been we've had a bit of a bull, bear, and neutral market for the last 11.5 years. I'm just wondering what we can do in a bull market. And so this has been a demonstration that active management, it is possible to outperform passive management. You can outperform the commodity, and I think the business model and portfolio demonstrates that. But enough about Franco-Nevada. I want to talk about the World Gold Council. And my message today is that the gold industry is perhaps too complacent about the gold price, that we spend more time marketing equity than we do actually about worrying about our core product. We're unique as an industry because we're one of the few industries that actually produces a lot more than is consumed. And if you look back over millennia, we've created this stockpile of gold at surface right now that swamps any annual production that we have of gold. And what I like to sort of scare mining CEOs about is that, you know, half the gold is in jewelry. So we say, okay, that's fabricated, that's likely to stay in jewelry. But the other half of gold, about $4 trillion worth, is sitting there in bar forms and wafers in coins. It's highly liquid. And what this is, I like to have that image of this liquid pond being held back by a tailings impoundment wall. And this is something that's vitally important, is that we have to, as an industry, be able to convince those people that are holding gold to maintain it, and even actually buy more each year if we're going to have a compelling story as an industry. And one of the things that, if we're not paranoid about this, is just look back at what happened just recently. And if you look back to the early 70s, we had net selling by the central banks, and they represented right today about $1.5 trillion of the gold that's in the marketplace, that really liquid stuff. And we were in a phase where there was a breach in that tailings impoundment wall. That gold was being sold aggressively by central banks 30 years ago, and then 20 years ago in this town, Gordon Brown set the bottom of the market by selling the Bank of England gold reserves. And that was a terrible precedent because all the other central banks were following that lead. And so what you could see is that the World Gold Council provided a tremendous service to the industry by spearheading the central bank gold agreement. This was done in 1999. It didn't stop gold selling. But what it did was slow down what was an acceleration of gold sales, as each central bank was actually competing to try to sell gold ahead of the other bank. And I think what that slowdown, I think, was very helpful for the industry because it could have been more of a catastrophe. And then the other irony is that we all suffered through the global financial crisis, but gold company CEOs should be on their knees thanking God that there was a global financial crisis. Because that, in 2007, is what turned central banks into buyers of gold. And we eliminated the net selling of gold. And so we've been the biggest beneficiary of the global financial crisis because we have now a major a systemic change in the gold market with the central banks buying. And I think what the World Gold Council has been doing now is making sure not only does that stay up there, but can we accelerate that trend further? And I think they're doing some excellent work. World Gold Council has been the leader in terms of helping the industry make sure that the central bankers appreciate the asset that they have, and that has a true monetary value, and true value as a central bank asset. The World Gold Council is working right now with 140 of 158 central banks around the world. And right now, we're the trusted advisor to the banks. We're providing education and symposiums in schools and accounting policies for the central bankers, where they attend universities here in the UK or in the US, China, or Singapore. And what we do is we get the central bankers together in a room. They all see the positive reinforcement between each other. They learn how to account for gold, and they see this as a tremendous service. The central bankers just earlier this year awarded the World Gold Council the Central Banking Award for being a trusted advisor and supporter to them. And I think this is paying a lot of dividends to us. In the first quarter of this year, it was the record buying by central banking since 1972, since we delinked the dollar to gold. And so I think it's a very positive trend already starting for this year. Last year was a record. We're already on track to be a record again for this year. And I think the World Gold Council is playing an important role in this. But that's $1.5 trillion of the $4 trillion I'm telling you that's behind that impoundment wall. And are we doing a good job on the rest of it? Well, this is what institutional investors, this is a survey of US or European pension funds. And this was just done late in 2018. And gold is the last thing they're thinking about in terms of an asset class to have in their portfolios. And so this tells us we have a lot of work to do in the sector. And one of the aspects about it, it's both a risk, but it's also a huge opportunity for us. There's 186 trillion of financial assets invested in the world. Less than 1% is held in gold. And yet, you have asked John Reed, our market strategist, who's here today, he'll tell you sort of the optimal weighting is probably closer to 4% in any portfolio, because it has a negative correlation to other assets. So if we can do a good job of convincing institutions they should have just a bit more gold, if we ever got them to the full 4% weighting, that's another 6 trillion of demand for gold, which is much more than the stockpile we have right now. So even a partial move like that could actually change the entire tone of the industry. That's the opportunity. That's one of the things the World Gold Council is trying to pursue right now. In terms of how do we get the institutions to be interested in gold, they've told us quite a few things, in that they need better market information, they need to have better visibility of how gold is traded and the volumes behind it, better perspective in terms of the efficiency and fairness of the marketplace. And I think if we can get some of those things delivered, and we would have less penalties from a number of the regulators in the business. And so if we can get that, we're going to have a much better gold market. That is core to the World Gold Council's activities today. A lot of this, in terms of influencing the decisions, it's just pure research, providing data to the marketplace. The World Gold Council has been doing this for 30 years, but we've stepped up the game. And you'll find in the last 6 months, there's been 2 new products that have been provided by the World Gold Council, beyond the ones you see in terms of the gold demand trends and gold insights. And this is the Gold Hub. The Gold Hub is a unique database right now for institutional investors, where they have now all the data they need to do their own modeling in terms of the investment demand for gold by geography or physical demand for gold by geography. We can suggest various models for them in terms of how to model the gold market, but we can't be an advisor. But what we can do is, here's the tools in front of you, you can go forward with that. The other tool that's now available is the Gold Valuation Framework. If you have your own portfolio as an investor, institutional investor, and depending on the type of assets you have in that portfolio, what is gold, a little bit of gold, a 1%, 2%, 5% of that portfolio, what does it do to your risk return in various market environments? These are brand new, free products. They've just been launched. And John Reed, if you could just stand for a minute, I'm going to just embarrass you. He's the pioneer doing this. Ask him any questions, because it's a product that we think is going to help institutional investors be much more effective in terms of treating gold as an institutional asset and doing it, and it's something that's available from the World Gold Council today, and so please take advantage of that. Also, what the World Gold Council is doing is trying to make it easier to both buy gold and trade gold. And one of the things is, a lot of you will remember that the World Gold Council pioneered the first major gold ETF, the GLD on New York, partnered with State Street in 2004. And today it's about a $30 billion asset. There's $30 million worth of gold held in that ETF. Actually, I had the privilege last year to go actually visit the safe here in a secret location here in London. And so it's very impressive, you know, a room this size, gold stacked up. I did count the bars roughly myself just to make sure it was all there, so I can personally vouch for it. So it's a pleasure there. We did that, and it's actually been the pioneer for a lot of other funds. There's now $70 billion other dollars worth of gold tied up in other ETFs around the world, in Europe and Asia and the US. So it's $100 billion from something that the World Gold Council pioneered. But some of these products aren't suited for everybody. And so what the World Gold Council has been doing is pioneering new products. And last summer we launched a new product called the GLD-M, the mini GLD. And what this is designed for is, a lot of investors today buy their gold on platforms. TD Ameritrade, Schwab, they have a Roth account or 401k retirement account. And what we've done now is made it easy for these platforms to say, oh, you can make gold now an offering. So you can buy equities, you can buy fixed income, and you can buy a little piece of gold. And what's great about these retirement accounts, it's sticky gold. We have about $650 million now in the GLD Mini. It's all buying, virtually no selling. And we think this is a new product that's going to continue to grow. So we see this is going to be a new product that will take more gold from the marketplace, and will be helping to support and sustain gold demand. The other aspect of the World Gold Council is new trading platforms for gold. And I think the environment of price fixes is not a popular thing nowadays. And over-the-counter markets, what regulators really want to see is fair, transparent markets that are efficient. And so more clearing markets, such as we have with the Shanghai Gold Exchange, which the World Gold Council has been an advisor and a participant in terms of helping that get launched, and subsequent products such as the benchmark price on the Shanghai Gold Exchange. And also with LME Precious, which is a new project. We're getting good traction now. Not all the players are yet involved in it, but again, we think these trading platforms are part of the future for helping provide a better platforms for trading gold and making it something that even more institutions can participate. And of course, fundamental is gold demand on a physical basis around the world. The World Gold Council has been present in India and China for almost 30 years. And one of the things that's happened is, in China, the Chinese have actually listened And they've actually formed policies in the early 2000s that have been very friendly to gold. So not only is there a retail market for gold in China right now, but there's a regulatory environment in China that now allows their pension funds to buy gold, physical gold in their pension fund. It allows their mutual funds to buy gold. It allows their insurance companies to have gold in their portfolios, because they really believe the science that gold is something that actually will improve your risk returns over a cycle and make your portfolio returns more powerful. And this is something that we'd like the rest of the world to be able to accept the same philosophies and have a regulatory environment that is as open for our financial institutions to buy physical gold or other gold products in their portfolios. There's a lot of policy work done in China. I don't need to read you through, but the fundamental time was back in 2001, 2004, when they set the policies for creating the modern gold market. Now you have fintech applications in China that are very reliable. You don't have to worry about the counterparty risk. The World Gold Council has been working very hard in India as well. It's just a lot slower there. And so what we're seeing now is we're getting more traction. I just look at it and I'm kind of looking at the measure. We're 15 years behind in India. But if we can do anything what was happening in China in terms of making it a more modern market and something more receptive to the mainstream, I think then there's huge potential there as well to expand the demand for gold and uses of gold to a broader market. In terms of the other efforts by the World Gold Council, these are very nice wins. And one of the things that was done just in the last 2 years is the World Gold Council was a pioneer in helping the Islamic world to try to actually rationalize whether gold was Sharia compliant. Believe it or not, we know the Muslim world likes gold, but it was never clear whether it was compliant. And so that issue is now resolved. We've now reserved what is required for buying or trading gold and doing it within a compliant policy so that any country now can buy it and not be concerned that some cleric will say, you haven't bought the gold properly. And so this is, I think, a great initiative. We're now seeing the benefit, a number of now Sharia-compliant trading exchanges being set up in the Middle East, a number of funds that are now promoting to Muslim investors Sharia-compliant funds. And so it's possible now we can expand that market as well. Also, we've been active in policies with other governments. Right now, the highest VAT on gold in the world is in Russia. So that's an obvious target. The World Gold Council has been providing support to the various parties and the industry itself in Russia. And I think that support has been helpful, that we're very optimistic that something will soon be passed to help actually make it easier for the retail market in China to be able, or Russia to buy gold. Our fingers are crossed this will come across the line soon. But there's similar efforts happening in other jurisdictions to try to get better treatment for tax equalization. Gold is sometimes taxed at a higher rate in other countries than other products. So we're fighting to get gold treated as a mainstay asset and be maybe less regulated against as we have in some jurisdictions. So over time, there's been an evolution in terms of what the World Gold Councils have been about. And I look at my original pioneers that set up the World Gold Council in 1987, Peter Gush, Harry Conger, Dale Hendrick, these guys that came from the big global mining companies, and they said we have to do something similar to what De Beers is doing to protect the market. The original focus was jewelry marketing and research. Well, the focus has moved away from jewelry marketing now because we think the best value add for the industry is focusing on these other policy, central bank initiatives, and the investment market and regulatory market for gold. And so you can see this trend's changed, and it's changed a bit with the membership. But one of the things I like to say is all this work, hugely valuable. I like to say as well, if we didn't have the World Gold Council, we would need to create it right now. And these initiatives are the deliverables that we have for the gold industry, tremendous value. Members are paying 10 cents an ounce, an annual ounce, to be a member of the World Gold Council because it's essentially self-financing from the money we make from the ETFs. I like to tell members of the mining industry this is the best 10 cents in your cost structure in terms of maintaining the veracity of our industry, making it an investment destination, and making it something attractive to investors around the world. I think we're blessed to have it. And what I'd like to do is finish by just basically thanking the members that we have for the World Gold Council. We have 26 companies. Even Mark Bristow now is a member of the World Gold Council. And we represent over 100 projects, 500 projects, over half of the corporate gold that's produced around the world. And so I thank them for participating in this effort and doing a good job for industry. So, thank you.
Okay, I'd just like to invite John Cumming up, Editor-in-Chief of the Northern Miner. Gentlemen, we have about 12 minutes, so John, maybe get to your top questions, and I'll let you know when the time is up. But please.
On here? Can you hear me? Yep. Yeah, well, let's start with the World Gold Council. We're just a short walk away, a 10-minute walk from the world headquarters, and there's been a tradition the last few years of Canadian mining executives being the chair. But some big news this year is the new CEO, David Tate, in February 2019, from the financial sector. And some nice trivia about David. He's raised over £1 million for charity by climbing Mount Everest 5 times. With him coming on board, is there some new initiative that he's going to work on?
Well, the first initiative is to get in the Guinness Book of World Records, because the first mine he visited was Mopeng in South Africa, and he went to the absolute lowest level. So he's now getting registered in the book for doing the largest vertical on Earth, from the bottom of Mopeng up to the top of Everest. And so you'll see that hopefully sometime later this year. You'll be in the Guinness Book of Records. I think the last CEO did a tremendous job, Aaron Shismanian. He was with us for 10 and a half years. So it was we've been redoing the governance and of the World Gold Council. We have a broader set of committees now running it. And I think at the same time it made sense to change the CEO. And so it's kind of a refreshing of the whole way we run it. There's a lot of engagement right now by the gold companies in terms of Gary Goldberg. He's been very active on a new ESG initiative that's going to be coming out later this summer for the gold industry. Kelvin Dushinsky now is the vice chair, so he'll be now, he's in line to succeed me next year on the World Gold Council. We also have the Australians now are very active. Mick Wilkes of Oceana Gold, Sandeep Biswas of Newcrest. They're taking roles now in the executive for it. But what it is I think we're getting a much better interaction between the members on a broader basis than we had in the past, and with the management team that are really doing a great job there.
Right, and just growing your membership, you gave a bit of your pitch there, but is it basically that 10 cent, that's the resistance for joining, or is there another reason?
No, there's different reasons, because one of the things is we do have standards, and so we pioneered the all-in sustaining cost standard, and so we came out with new guidance because some of the members were drifting in terms of how they were doing the accounting. So what we're saying, if you're a member, you should really be following the standards you have for cost accounting. Also, we're pushing now that the industry as a whole should go to a higher level on ESG standards. And so we have the principles agreed internally. We've actually been floating them in the marketplace in terms of what we think the industry should be doing. It's going to be hard for some companies to come in saying, you want us to have third-party verification on these very aspects of our industry, and we have to do it over these certain number of years. Yeah, it's going to be tougher. So I think the harder part is actually getting up to the standard that we want to have of the industry. We think it's going to make it a better investment destination, but not every company can do it. So the 10 cents is just nominal. We don't need that. But we need to say you have to have some commitment to join, but the harder commitment is to live up to standards that are going to get tougher over the next few years.
Right. Now let's flip over to Franco-Nevada. We don't have too much time here. My first notes I wrote down was one of the greatest success stories in the gold sector this millennium, in a class by itself. So your quarterly results for spectacular first quarter. And you had some big news. Your co-founder of Franco-Nevada 1.0, Pierre Lassonde, announced he'll be retiring next year. And if you could just comment on your search for a new chairman, and what are your own thoughts on succession that you've experienced up close?
What we've been doing is this. I've been with the original Franco and the new Franco for about 32 years. And actually it was started about in 1985 in terms of when we first bought that Gold Strike royalty in Nevada. That made the company. And I think what's important is I think what makes companies successful, and you can even look at Agnico Eagle, they kind of have the DNA of the founder. And there are certain things that makes the company successful that you don't want to turn over everything all at once and then you've lost that DNA. And so we've been very cautious in terms of not trying to remember what Seymour Schulich and Pierre did differently back in 1985 in terms of building that company through the 80s and 90s. When we came back and relaunched Franco-Nevada, we tried to bring back as many of the original people as possible. And then when we bring new people in, it's always educating them in terms of, one is keep those overheads low, keep the organization focused on new investments, not taking care of existing investments, and then manage the ego of the CEO. Don't let him think he's the master of the universe. And so all of the organization's there to keep me humble. And I think whoever's going to be the new CEO of the company, well, we've kind of lined that up right now. We're trying to do an organization where we're more of a partnership than having a large ego running the company. So we're doing all this internally because I think it's important to keep the DNA. Last year we appointed Paul Brink, who's been with me for 14 years, as the President and Chief Operating Officer. So essentially he's the CEO designate. And Pierre this year has announced that 1 year from now he'll step down as chair. And I've been going through Europe, and we've just been marketing in the US as well, to touch base with the institutions to say what is the proper choice going forward and governance-wise, because they're the owners of the company. So we're consulting with them on the choice. I have my hand up to be the next chair of Franco-Nevada, but it's really, we have to consult with the large institutions before we make a decision. We'll make a decision later this year.
Right.
So, but we're getting good feedback on that.
Good to hear. I always think of Franco-Nevada, I think of some superstar singer or film actor. They make it look very easy, but there's a lot of work going on in the background. I wonder if you could just comment on how you best craft a royalty deal, like choosing royalties, streaming, net profit, how to negotiate the deal, when to renegotiate, that kind of thing.
John, it's easy. The thing is, the luxury we have is, got to remember, our very first royalty was Gold Strike, so that was a cash cow right there. And when you have that, then you have the ability to buy things when the market dips. And because this is such a cyclical industry, if you've got the ability to buy things and the market dips, you can buy great assets. And then, and I guess the only tough part is not to buy things when there's a bull market. And so what happens is, we've done our best deals when the downturn happened. For instance, at the global financial crisis, we did the Palmarejo Guadalupe deal and Gold Quarry. They're company makers for us. We had the dip in the base metal companies in 2014 to 2016. It was Glencore and Teck and Freeport that were coming to us for help on their balance sheet. So we were able to buy into their best mines and buy the gold out of those copper mines. And so I think the other thing we have to resist is when we're in the bull market and we're not spending money, we're actually piling up. So sometimes we have north of $1 billion in cash. And I get this, oh, you have a lazy balance sheet, dividend out, or go buy something and accelerate your growth. I think that's the only hard part, is not spending money sometimes. And then what we want to do is keep that money because we want to be the only ones that can write a check on the next downturn. I think right now we've just dipped into our revolver, so we have just a bit of debt in the company, and that's because we're finding a lot of things to buy. Right. So we're counter-cyclical.
How much of your time is tracking existing royalties out there, just waiting, might we wait 10 years to buy a royalty off someone when their life changes or something? And how much of your time is spent creating royalties, that kind of thing?
It's the opportunity is waves. Because we had the base metal companies in trouble. Our time was spent on that capital, helping them fix their balance sheets. I think right now there's not a lot of, we're doing just the small exploration or early stage projects because we can afford to get into some of these projects early. Just earlier this year we put about $20 million in the Marathon Valentine Lake deposit in Newfoundland because we think that's a great ore body. Someone's going to build that mine. We're in early, we have a royalty. We've just done Solaris Norte with Goldfields. We bought the underlying royalty in that project. Again, it's pre-final feasibility on it, but again, we're absolutely confident both of these will be mines in the next 5 to 10 years. And we think we're buying at a price that even if it takes 10 years, we're still making money on them. So again, we have the luxury. We can buy some of these long-dated assets beyond the time frame of most other investors because of the nature of the portfolio. In terms of creating royalties, that's when you're into the mine financing and building stage. We're really not at that stage now. I think that's going to start happening next year. Right now, we're spending most of our time is actually deploying in the oil and gas industry on the U.S. oil side. We're finding a lot of opportunity there. So there's been a lot of focus on that recently.
Right. Something I've always been curious with Franco is what kind of relationship do you have with these companies after you've struck the royalty deal? Is it hands-off, or do you kind of want to help out, so to speak?
It's hands-off. And the nice thing, what I'm proud of, is in 32 years and hundreds of royalties, I've never had a lawsuit with any of the operators. We have very simple royalty contracts in Western courts of law, so no one's ever challenged them. Sometimes there's an auditing issue. and we'll do it, but it's very rare we ever go to an arbitration on an audit issue. So I think we're seen as good partners. We help out on local community social investments. We'll contribute it. We're down in Antamina. We help fund the school program around the mine. At Detour, we're helping to fund, there was a fatality there, and so we're helping to fund some of the efforts to support the families that have lost their main partner. And so I think the industry sees as partners. We finance, of course, the Mining Hall of Fame. We sponsor that as was chair, but also the Prospectors Awards. So we want to help bring out the best in the industry.
Right. And on the map of your Franco's assets, 227 exploration assets. They're obviously not material, but there's a lot of them. Like, what's your philosophy towards investing in juniors, that kind of thing?
It's good geology. Actually, it's not so much the juniors. Is that interesting property? Is that great geological expertise? And our view is we can buy it whoever owns it, because if it's a good property, it's going to go to stronger hands eventually. We were into Gold Strike before Barrick was. We were into Cobre Panama before First Quantum was. And I think what it is that if it's a good ore body, it's always going to attract a stronger operator. And so it's the deposit itself. That's where we have the tenure. It outlasts management teams. Those change all the time.
Right, okay. And one last question. This is more on a personal note. You are a significant donor to charities, medical research and education. There's the Harquail School of Earth Sciences at Laurentian. Do you have any reflections on this whole experience?
Well, I'm following my mentor's footsteps. Seymour Schulich has been one of the biggest benefactors in Canada, so is Pierre Lassonde. Our philosophy is we don't use the company to give money to charities. We do it with our own money. And so we just do mining-related charity and institutions, but for like hospitals and universities, it has to come from your own pocket. And so I've done it, but it's actually my family. I joined my wife and daughter are here. And, it's actually, we call it the Midas Touch Foundation, because if you remember, the Midas mine was where we made a lot of our money. Our dog is named Midas, and he happens to be a golden retriever. So it's something that I think the whole family is involved in this effort. And what I like is that, Pierre has done the Lassonde Mining School. I've done the Exploration School in Sudbury, because I think the biggest wealth, as I go back, is not by financial engineering, it's by finding new ore bodies. And so if we can have some of these kids find new ore bodies in Canada, everybody's going to win. So that's the fun part. And so I hope to actually get more involved in it over time.
Great, yeah, very commendable. And I guess that's it for now. I tried to squeeze as many questions in as possible.